everybody, I'm Bob Marone for Westchester Talk Radio, and once again, we move forward with our series with our friends, Hightower Westchester. Now today, we're fortunate to have two guests, Richard Flahive, Chief Investment Officer and Partner at Hightower Westchester, and Robert Picard, Managing Director, Head of Alternative Investments at Hightower Advisors. And he has a very interesting background. Robert has over 30 years of experience on both the buy and sell side, having built multi-billion-dollar alternative investment programs at First Republic Private Wealth Management, the Carlyle Group, Rock Creek, Optima Fund Management, RBC Capital Markets, and InfraHedge State Street. In his most recent role as First Republic's Managing Director and Head of Alternative Investments, he consolidated two alternative investment businesses into one platform and generated meaningful growth in both wealth management team participation and fund offerings across all asset classes. Prior to that, he spent more than a decade as founder and CEO of the Rumsen Ridge Group, a consultancy focused on building alternative investment platforms. Robert has spent much of his career performing due diligence on manager strategies, visiting over 1,000 firms globally in the last 25 years. He knows from which he speaks. Robert, welcome to the Videocast. Can you tell us about yourself, if indeed I didn't cover it all, and your role that we would like to hear at Hightower?
Well, Bob, thank you very much for having both Richard and myself on your show today. Really appreciate it. Grateful. And listen, I no doubt you pretty much covered anything and everything you should know about my at least professional background. I am also half Swiss, lived about 20 years over in Europe prior to that. But basically, to answer your question, my focus right now at HighTower Advisors is entirely on providing private market opportunities for all of Hightower's advisor businesses, including Richard, and identifying new trends and embracing dislocations that provide ultimately great opportunities. On the wider investment solution side, where I work with Stephanie Link, that will include providing innovative solutions for your typical high net worth and ultimately ultra high net worth client. You know, just as a recap, Hightower's DNA at its core has been innovating the RIA business. And we're always looking to differentiate ourselves by allowing flexibility and autonomy that is really no longer available for many advisors at some of the larger firms. We're adopting really the same approach to private markets. Our alternatives effort, basically private markets effort, which is now a very popular, I think we're migrating away from alternatives more towards the definition what's been better received by high net worth investors is referring to alternatives as private markets. That private markets effort here at Hightower, along with the wider investment solutions team, really has the most real market experience I've ever encountered in my professional career. We really have what I refer to as a very senior and seasoned team, where both myself, I have over 32 years of experience, but then I'm joined by Stephanie Link, Bob Lyons, Mike Shea, and others who have on average north of 30 years experience across the three of us.
Okay, well, let's start at the top then, given our topic, Robert. What are alternatives and why are we talking about them here today?
So, private markets and alternatives, the easiest response really is that anything that's not a public listed equity or public fixed income security, I would consider to be an alternative of some fashion. I typically define an alternative as an active manager or manager who has all the tools available to manage your client's money effectively. And that ability to invest in both private investments, such as go long and short equity where needed, but can also invest in private equity, private credit, real estate, private equity secondary, venture capital, and even to a certain degree on the more liquid side, hedge funds. And I find that those private markets truly complement your public equity and public fixed income allocation. So for instance, there's a whole spectrum of private market solutions or opportunities. And, we basically believe that, private equity and private real estate and private credit really complement your public equity asset allocation. And that would include private equity, venture capital, and secondary private equity. And then if you're looking at fixed income, we would typically look at private credit and private real estate as solutions that also complement and can provide alternative ways to gain access to both revenue streams, income, and ultimately capital appreciation. Now, traditional equity and fixed income markets, I think we all recognize and acknowledge that they're considered to be very efficient. There's really very limited risk dispersion on your traditional across all the public equities that are available in the market today and your public fixed income investments. Where, on the other hand, private markets, private equity, private fixed income, et cetera, are much less efficient. And there's much more opportunity for experienced allocators, such as Richard, myself, and others, to basically have greater opportunity to generate higher returns or higher risk-adjusted returns. But, because those private markets have much less liquidity, all of your investors and investors in general need to be rewarded for that illiquidity and ultimately be rewarded with a higher level of risk-adjusted returns. And, ultimately our advisor, Richard, his clients, his team, and our other teams at Hightower really demand best-in-class solutions to complement that public equity and public fixed income portion to basically be allocated in private markets.
Richard, welcome our guest.
Yes. Bob, thank you so much for hosting here today. And Robert, always a pleasure. I really appreciate you guys, what you're doing back in home office there and also the time today. I would just add, more to the why. And I think the thing that kept coming to mind while kind of thinking about what I wanted to mention here today was, going to Hightower conferences, almost a decade ago and seeing who was in the room, right? And that's predominantly changed. And I think credit to Robert here as well. But, it was a lot of boutique kind of long only bond managers. And now you look at the lineup of sponsors and people that have come through the door that are working with the Hightower teams, and it's predominantly, a lot of private market alternative solutions. So it's definitely more relevant and prevalent than I think any point in my career. The market's deeper, more sophisticated than ever, and I think that's where having professionals like Robert and his team can really benefit teams across the platform. But we've been doing alternatives both on the liquid and illiquid side for some time, and I think as the offering has grown. So do the allocations and so do they within portfolios.
Alternatives seem like they're more complex than your standard stocks and bonds. Can you touch on this, Robert? How do you educate clients to have a better understanding and to buy in?
So I would say that I want to provide a little bit of context. And first of all, let's just look back at 2022, which I know things move quickly, but that's relatively recent. In 2022, public equity and public fixed income underperformed. And more importantly, historically now, whether it be 3 years, 5 years, 10 years, and longer, private markets across both private equity and private credit and real estate have actually outperformed public equity during that period of time. And, yes, historically, we've had to think about there was a certain need for seasoned professionals to perform due diligence and really analyze and choose and select the best managers. You really want a seasoned team because to a certain degree, going into the private markets world, you want a certain amount of sophistication. But what's been happening, there's, like all markets, and we've been doing this for a long time, I think the three of us, is markets evolve. And one of the interesting parts of what's been occurring now is this concept of what I refer to as democratization of private markets and miniaturization of private markets. And what's really happening is that traditionally private markets have been embraced aggressively by endowments, university endowments over many, many years now. And the average billionaire has north of 50% allocated to private markets. And with this democratization and miniaturization, there have been a number of firms, including Blackstone, Apollo, and other leading private equity and or alternative investment firms that have been innovating and developing solutions for qualified purchasers and accredited investors that allow a wider group of high net worth investors to access some of those same private market opportunities that were embraced by university endowments and or billionaires. And really, I always say, isn't the best form of flattery, imitation is the best form of flattery. We should all be able to invest our capital or our personal wealth similar to a university endowment and or a billionaire. I find that always important. And, as for the benefits, HighTower Advisors and our teams access private funds. And one of the things that we're expecting to see as that adoption starts to increase, we've seen historically most allocations, and it's hard to determine exactly where the 60-40 concept originated, meaning let's say 60% allocated to equities and 40% allocated to fixed income. What we're seeing now, due to the outperformance over longer periods of time of private market investments, we're seeing a number of firms recommending or a migration to a more a new innovative asset allocation, which would include, let's say, 50-30-20, meaning a 20% allocation to private markets. And if that increase or that adoption, the average high net worth investor has less than 5% allocated to private markets. If that adoption or that increase to private markets were to occur, we're literally going to see a wave of $1 trillion entering into the private markets arena. And that's really why both Richard, myself, and HighTower, we're really positioning Richard's clients and our wider client base to be prepared and ready to accommodate and have solutions for that large wave of $1 trillion that we're expecting to see.
Wow, that's a lot of money, Richard.
Yeah, I think Robert, mentioned some really good points there. And a lot of why we're sitting here today is the educational side of it, right? There's a lot of really, strong work being done behind the scenes to provide these offerings to our clients. And the last thing someone wants to do is invest in something that's total black box and that they don't understand where their money's being, moved to. So for us, having, the resources of Robert and his team, but also just doing a video cast like this to show, call it the mass affluent and our clients, hey, these things are available to you and, they aren't black box and we can provide these solutions to you in a timely and efficient manner. It has become, really important to us. Clients are taking notice. Getting down, into the weeds here, when we sit with clients, they know what these are. You rewind, 15, 20, 30 years ago, you reference the show Billions or something like that. What is a hedge fund? Oh, everyone gets arrested that invests in a hedge fund, right? That there's some of these misnomers that go along with the space. And I think breaking down those barriers has been beneficial for us. But the swimming of downstream, as we like to have, we've kind of coined it, to clients that are in that kind of high net worth, mass affluent, as opposed to the $50, $100 million clients. There's a lot more solutions available, and that's made our lives a lot easier because we know the importance of having these types of strategies in portfolios, both liquid and illiquid, is important for our clients. But I think one of the more important aspects of private markets is the liquidity aspect of it. Understanding what it is, what it means to people is generally where we start with clients and prospects. You have to be smart about how you allocate alternatives and some of the more liquid vehicles, but ultimately that liquidity compensation is very additive to clients and their portfolios. So I think getting our head around it and packaging it into a way that clients can understand and access is what Robert's team has done, as well as us here at Hightower Westchester.
Now, this is for both of you. Historically, how have you used alternative investments?
So Bob, I'll answer that. I'll try to keep that as simple as possible. I really look at alternatives in private markets as a complement to your core public equity and public fixed income. And what basically it's forcing you to do is to simply have a portion of your portfolio that is more longer term in nature, that will benefit from hopefully better and should have better risk-adjusted returns than your traditional public equity and public fixed income, and ultimately provide you with longer-term stability for your portfolio.
Richard?
I would agree. Robert mentioned it before, the last, call it, 18 to 24 months have been pretty important for markets, and alternatives have really, shown their mettle, I think, here. And, getting compensated for that illiquidity, but also to help bring down volatility in portfolios, increase alpha. I would put an asterisk next to this too. They're not for everyone, right? I mean, you have to understand the client. And I think, that's a big part of it as well, is scanning the market and seeing what's the flavor of the day, where does it make sense, and what can we put in front of clients that they'll ultimately gravitate towards.
Over the years, we've seen the numbers and types of products increase. We've seen the regulations change. How have they evolved?
So, I think the best way to describe it is that there's an evolution that's ongoing as fast as we're seeing technology evolve. And all of that is a lot to do with both innovation at a number of different levels. And, that innovation, I'll just give you an example, and this dates me a little bit, but going back, 30 or 40 years, I remember working over in Europe where if you wanted to enter an order, I mean, today you can literally open up your iPhone and process an order, an equity buy, sell, whatever you want for your portfolio, wire money, et cetera. Back then, you'd literally have to take the order from the client, walk across the street, and ultimately send a telex. I mean, this is pre-fax, pre-everything else. Send a telex overseas back to the US to get that order entered. Then we moved on from, the telex to better communications, to real-time pricing, real-time data tracking. The markets have evolved in a meaningful way where, originally, and Richard alluded to hedge funds earlier. Hedge funds, we remember George Soros in the late 1980s, early 1990s, breaking the Bank of England. That was the era of global macro. Then we entered into the era of arbitrage. And then ultimately those arbitrages literally arbitraged away a lot of the opportunity. And then we opened up the doors to more private credit, where now and more private investors via private credit are replacing banks and the mechanism where banks were lending money, and new alternative strategies, which now ends with this concept of what Richard and I were just talking about, which is the democratization, miniaturization of alternatives, making them more available to the accredited investor level, which would mean someone who generates or who has earnings of approximately $200,000 a year. And not only that, but then where traditionally it used to cost millions of dollars to simply subscribe to a private market investment, today with that miniaturization of these structures, investors with allocations as small as, in some cases, $10, $15, or $25,000 have access to these opportunities. So there's this innovation has been accelerating, benefiting, and will continue to really continue to benefit private market and ultimately all investors.
We're coming to the end of our time together today, gentlemen. And do you have any closing thoughts? Now, Robert, let's start with you, and then we'll finish up with Richard.
So thanks. To close, I think, Bob, clearly my view, and I'm talking my own book, obviously, and this is the focus of most of my professional career, is I am absolutely convinced that private markets continue to lead the way to more democratization and access for average investors to access both private markets, and then ultimately the technology innovation across private markets will make the access much easier to be able to subscribe, to be able to invest, similar to what you're able to do on your iPhone. I mean, right now you can do it on equity markets. I'm hoping that 3-5 years from now, if not sooner, we'll be able to get all the disclosure information, all the information at your fingertips via the iPhone. And just to give you an idea, research from KKR, another well-known private equity firm, they've published research recently that they anticipate north of $3 trillion of new capital coming into private markets from the mass affluent. Again, I was fortunate enough to have as a senior advisor Arthur Levitt, the former chairman of the SEC, and his favorite quote that he impressed upon me during our time together was always, we always must have a level playing field for everyone who's allocating across. At that time, he was talking about public markets, but I would like to adopt that same concept that there'll be a level playing field, whether you're a billionaire or a high net worth investor or an individual investor. Everyone should have the same opportunities to make strategic investments into private markets.
Thank you. Richard.
Yeah, the technology piece is interesting. And I think, it's definitely been a large driver of private markets. I mean, when you think about the ability for people to trade instantaneously on their phones, you've seen the number of public companies, shrink significantly over the last, several decades. And I think it lends itself to really how deep the private markets are. Firms want to stay private longer. There's benefits to being private. And I think we've touched on several of them here today, but it lends itself to the opportunity. There's more opportunity, and with that creates, winners and losers, and where you have to have a professional team around, this research and this process. And, Robert, thank you again for coming on. A lot of this information I think will be really helpful for our clients and our listeners. And, alternatives are becoming more and more mainstream, and they belong in client portfolios.
Absolutely. Well, I'd like to thank both of you. First, Robert Picard, Managing Director, Head of Alternative Investments at HighTower Advisors. Thank you so very much. And Richard Flahive, he's the Chief Investment Officer and Partner at Hightower Westchester. I want to thank both of you, and have a great day.
Thank you, Bob.
Thank you.
HighTower Westchester is a group of investment professionals registered with HighTower Securities, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other information contained in this research is provided as a general market commentary. It does not constitute investment advice. HighTower Westchester and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This podcast was created for informational purposes only. The opinions expressed are solely those of HighTower Westchester and do not represent those of HighTower Advisors, LLC, or any of its affiliates. HighTower Advisors do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax advice or tax information. Tax laws vary based on the client's individual circumstances and can change at any time without notice. Clients are urged to consult their tax or legal advisor before establishing a retirement plan.